Well, good afternoon and welcome. You are watching Buy Now, Sell Now and ET Now. I'm Nupur and of course, as always, Snehi is with me. And today we begin the show with a listing that is going to be hitting the market soon. Now, Priority Jewels' IPO is opening for subscription, and joining us in the studio today are Shailesh and Aditi. Thank you both for being with us.
Thank you.
Shailesh, first to you now. What do you think is really going to be driving the growth for Priority Jewels after the IPO actually opens?
So basically, we are on a good trajectory, and over the last 3 years, we have been seeing that we are growing at a good rate. And with this new fresh funds coming into the company, the growth will be at a much better rate than what we are currently at also.
Okay, and Aditi, hi, welcome to the show as well. Give us a little bit of color on the operations of the company. I understand you provide studded jewelry and other lightweight everyday wear jewelry to other retail players. Talk to us about what the demand on ground is looking like. First, with respect to the gold prices that we're seeing, and they remain highly volatile. And on the other hand, we've got the festive demand also coming up, and that's already in fact started to trickle in. How is business shaping up?
So, like you said, we're in that sweet spot of light and affordable, which is growing at the highest pace currently. Because we are B2B model and we supply to chain stores as well as independent stores across India, demand is in a good shape. Diwali is looking good. Work is come in, and purity may change because of gold prices. A lot of customers have moved from 18 to 14 and to 9 carat, but volumetrically it's looking good.
And Aditi, who really are your biggest clients, and what does that client base look like?
So like I said, we do 50% of our business is India, 50% is export, and within India we have a good number of chain stores like Kalyan, Joya Lucas, and as well as independents, Carrot Lane, customers like that who are looking out for the affordable everyday wear, workwear category as well.
Okay, and Mrs. Sangani, also give us a sense of the debt that you have on the books. I understand that out of the 92 crore that you're looking to raise, 75 crore is going towards debt repayment.
Yes.
As per the latest numbers that I just saw, 102 crores thereabouts is the kind of debt that you have on your books,
True.
right? So out of that, 75 crore will go away. What's the plan for the incremental debt repayment? What could the timeline look like?
No, so we continuously need to have that because we keep on buying our gold from only banks. We do not buy it in the open market.
Okay.
So bank is a revolving thing. We keep on, so there is something called as GML, gold metal loan. So we get our gold on gold metal loan from the banks, and we keep on churning it as we make the jewelry, and as we sell, we close our deal with the bank. So there is a continuous loop in the thing. So whatever is excess funds we have currently will be paying off to almost 75 crore rupees out of this will be paid off to the bank. The rest is coming in working capital, and that should be good for us.
So just trying to understand, since you are buying gold only from banks, what is the hedging policy like
So
on gold?
that is automatic hedging.
Automatic
because
hedging, right, yes.
GML comes without a fixed price on the
Sure.
gold. So you have a time limit. We have 180 days to close our gold with the banks. So within that much time we are able to close, and that's when we sell to our customer, that is what the price we close with the bank at.
So that
there is
raw
no hedging.
material comfort is anyway there.
So there is no
that
hedging.
sounds good. Yeah.
There is no.
All right, and Mr. Sangani, where do you really see this IPO creating most value for you, and where do you intend to largely use these proceeds?
Yeah, so we are not doing any OFS, so we are not taking any money home. All the money is coming into the company. The company right now, it's on a growth path, needs a lot of funds to grow. Gold is not a cheap material, it's an expensive thing. So it's, so all these funds is ultimately going to go into the company to grow the company. And so we are looking at future as very good, growth path is there ahead of us. We are just at a very, you can say at a decent stage, and to grow from here is a good thing.
You was wanting to say something.
Yes, sorry, I was just going to add to that the plan is to, since we've been in this affordable range and this category, the plan is also to move slightly up to the slightly occasion wear as well. So we also want to create a new line and start taking that line to our existing customers. We have a great customer base of more than 200 customers. So if we're able to enter other territories with them, it will help us grow.
So I have a little interesting question, okay? You
Okay.
are listing at a time where simultaneously, and you of course must be aware,
Yes,
you have
absolutely.
3-4 other peers from the
Yes.
same industry also listing at this exact time. Why are you looking at listing now? I mean, what's the rationale in terms of this time?
I think the jewelry industry is in a good place, and it's a good time for us. We're being able to see the growth in front of us, so we feel like it's the right time for us. And I think there are some inherent advantages with listing, even for export. So we intend to be able to show our customers we are on the right path of corporate governance as well.
You were wanting to
Yeah,
add
so I
something.
was just wanting to add. So if you see, most of the jewelry that is getting listed is all B2C. Retailers are getting more
Right.
listed. So retailers are getting organized in a proper way. But the back end, which is us, we now need to start getting organized as per the retailers. So that
To
is
be
what
able to
you are going to
support
start
them,
seeing,
yes.
that you are going to see the manufacturers coming in and organizing themselves properly, so that we are able to cater to the retailers who are already organized, who are already in this, in a larger state. So in order to push that part, you'll see the manufacturers coming in more organized,
Yeah.
and it will happen that way.
Right, you were mentioning the fact that you want to enter more markets. So, is there any specific thing that you have looked up, with Diwali approaching soon, and we are really entering into the festive season? So, what are
Yes.
the plans for that?
So that's what I'm trying. There's a gap between when you come to affordable, lightweight, everyday, the kind that you wear to work, but then also then there's bridal. But there's a gap in between that we're trying to cater to next, which is the occasion where what you would wear, say, for a function or a friend's function or a puja or even a dinner party. That's the category that we're trying to enter now.
And you made that distinction between B2B and B2C, and in fact, my next question to you was that there are a couple of players who listed as B2C, B2B players, and now they're foraying into their own stores as well. Is that on the cards for you? Maybe in the near future, are you looking at retail presence?
No. We are not looking
Not
at
at
all.
all?
Not at
Not
all.
at the moment.
Not at the
We'll-
moment at
for
all.
sure. We'll
Nowhere in the
cross
nowhere
that
in the
bridge
last.
when we get there.
Okay.
Yeah.
All right. Thank you very much, both of you, for coming
Thank
to the
you.
studio
Thank
and
you.
joining us.
Thank you
on
for
the show.
having us.
Thank you for your time today. Okay, viewers, that was the management of Priority Jewels joining us on the show. Just a little bit about their IPO before we slip into a very short break. The IPO opens today, is going to be open till the 1st of September, listing on the 4th of September. Entirely fresh issue worth 92 crore rupees, no component of offer for sale. And the price band is between 190 and 200 rupees per share for a lot size of 75 shares. So that's a little bit on the IPO, and we've just heard from the management in terms of their growth plans ahead as well. On that note, time to slip into a very short break on this edition of Buy Now, Sell Now. On the other side of the break, we'll start addressing all your queries. So viewers, keep writing to us and keep calling us, and we'll be joined by our experts on the other side of this break. Stay tuned. Back with Buy Now, Sell Now, and just taking a look at where the market has settled 2 hours into trade. We're doing well for ourselves today compared to at least the kind of route that we've seen gone in the week gone by. 0.2% higher for the Nifty right now. 24,150 is a level that we've held on to. Sensex also higher by about 0.4. It's Nifty Bank today that continues to be under slight pressure. While the benchmarks are doing well, you've got the Nifty Bank that's absolutely flat with a tinge of a negative bias. The India VIX once again has cooled off to the extent of 3%, and the broader end looks cheerful as well. Mid cap higher by 0.2. Your small cap index is also seeing gains of about 0.5%. So looking good all in all, or at least decent if I can call it that, from the broader end of the market. Sectorally, however, it's a very big mixed bag. But what really stands out is Nifty IT today. Just pull up that chart. Nifty IT 3.25% of an uptick just on an intraday basis. Take a look at that spike that we're seeing in Nifty IT. It's names like LTM up 4.5%, Coforge, TCS, HCL Tech, Tech Mahindra, and that commentary globally from Nvidia as well as Salesforce has kept the entire market going, especially on the IT front. So looking good over there. This is being followed by 0.3% uptick in metal, pharma, realty, with oil and gas also seeing a decent up move coming in today. On the flip side, what continues to be under pressure is Nifty Defense, 0.5% lower over there, followed by mild cuts on FMCG, bank, energy. PSU banks are absolutely flat as well. So while the losing end of the market is not losing by a lot, the gaining end is seeing some very good gains on IT, metal and pharma. Just taking you through what the advanced decline breadth is looking like right now. We're actually exactly even, Steven, with 240 stocks in the green and 260 in the red. So absolutely split in the middle for the advanced decline. The biggest gains coming in on names like IFCI, 9.25% uptick. And I remember yesterday on the show also there was a query on this. Tejas Networks, Aether Energy, Tata Telegram, Newgen, PTC, all of these, Tata Teleservices, pardon me, all of these are looking very strong today. On the flip side, there's continued pressure on Physics Wala. Whirlpool, that was up about 9.5% yesterday, seeing some profit taking, as is the case with Bombay Burma and Credit Access. But time now to introduce our experts on the show today. We've got Mr. G. Chokalingam, founder and head of research at Economics Research, joining us on the show on the fundamentals. And of course, Kunal Bothra with us in the studio on the technicals. Good morning to both you gentlemen. Mr. Chokalingam, let's start with you. The first query is coming in from our viewer, Satya, writing to us from Kerala, asking if it is a good time to buy Bama Lorry for the medium to long term, or should he be looking at KFin Tech or CAMS instead?
Balmalari, yes, for long term. Short term, it may not give return because most of the deep value stocks are not participating in the rally. But it gives you very good dividend yield. So till it plays out, one can hold. And, it's a net cash company and fully diversified. It's a travel vacation business is doing very well. In the last June quarter results, all the segments have done well except grease and lubricant oil. That is mainly because of spot in the oil prices. Otherwise, the company is doing very well, and it's also trading just around 13-14 PE on 1 year forward earning. Very attractive, cash-rich company. So we maintain, our strong conviction. We have personally also invested in the stock in line with the compliance.
All right. So the next question that we're picking up is from Anindya. He's writing in from Pune. The stock in question that he wants answers around is Garden Reach. The quantity is 370. He's entered it at 2,681 rupees. So he's sitting at a tad bit of loss over there. The stock currently trading at 2,623 rupees. Now, the question is that what can be the expected target in the next 3 months? So Kunal, what are you seeing on the technicals for this one?
So I would suggest a hold on GRSC. I think it's a good stock to hold on to. The best part is that many of these stocks are now coming back into a recovery phase, the defense slash shipyard names. And I would sense that these stocks could eventually come back towards at least retesting of the previous swing highs. I would believe 2850, 2900 could be a swing high target which you can keep for GRSC for your time frame of 3 months.
Okay, that's on Garden Reach. Let's shift focus, and the next query is coming in from our viewer, Mr. Sekhar, writing to us from Hyderabad. The stock in question is PNB, or Punjab National Bank. He holds 1,000 shares at an entry price of 116 rupees per share. Stock is absolutely flat since he's bought it. It's exactly there rather. And his time horizon is just 1 month. Kunal, very near view, can you share your short-term outlook for this stock? Should he continue to hold or sell?
I would suggest to hold on to the stock as of now. I understand that I think PSU banking names have not done as smartly and strongly as compared to the other sectors. But then I think it's a matter of the phase of the markets where we are into, where the indices are consolidating. PNB I think is now emerging to be a decent chart. The stock has lifted off from its recent lows around 100 levels, retested 120, now going into a patch of consolidation yet again. I believe a breakout above 120 for PNB could take the stock higher to almost 130 to 135. So in the anticipation of a breakout, I will suggest a hold.
All right. The next question is coming in from Hyderabad, and the stock that is in focus is Protean. The quantity is 250. Now, the viewer has entered that stock at a price of 650 rupees. The question is long term. He wants to know, can I add more for 2 years? So, Mr. Chokalingam, how do you see this stock and the fundamentals that surround it?
Yeah, for long term, one can, particularly after the severe correction, valuation comfort is also there. So beyond 1 year, it can give a decent return. So I would suggest a hold on the stock.
Okay, hold on Protean eGov. That's the view coming in. Our next query is coming in from our viewer, Mr. Haripad from Guwahati, and the stock name is Suzlon Energy. Quantity 1,000 shares, entry price of 56. Asking what are the prospects of Suzlon Energy in the next 1 to 2 years period? Should I hold or book a loss? Kunal, take this one because I remember a couple of years ago, Suzlon was a single-digit stock, right? Went all the way up to mid-80s, and then it has fallen once again back to 47. While this has been a 1 to 2 year story for Suzlon, what would the near term or the near to medium term for this stock look like going ahead?
So it looks like that the stock is now, coming back into a downtrending move. What started off as maybe a corrective phase for Suzlon, maybe from the 60 levels, I think sometime back, I think is now going towards a sort of a steeper correction. The stock made a low of around 40 at the start of 2026, end of 2025, and it looks like that the stock may come back into a further corrective wave. I would believe that if your time frame is the next 1 to 2 years, there could be a possibility that the stock may continue to underperform.
All right, so that's the view coming in from Kunal on Suzlon. Welcome back, and thank you very much for staying with us on Buy Now, Sell Now. Kunal and Mr. Chokalingam both continue to be with us. We're going to start with a caller, with a viewer who's actually calling us. I believe, hi Bhaskar, you're calling in from Vijayawada. How are you doing?
Good morning, madam.
All right, so Bhaskar, please go ahead with your question.
Madam, I bought L&T for 100 shares at 4,220. Should I continue to hold it or sell?
Are you looking in the short term or in the long term?
Short term.
All right. So Kunal, what's your view on L&T? How does it look on the charts? I think Bhaskar wants to sell it.
No, so I think I'll suggest to keep a stop loss on this trade. The stop loss would be a closing or a weekly closing below the 4,000 mark for L&T. Till the time the stock doesn't close below this 4,000 mark, or 3,990 to be precise, on the stock, then there is a chance that the stock may show a comeback of sorts. L&T and other large cap names, they are going through a patch of consolidation. They had one of the worst phases, I think, in 2026 start, when the entire US-Iran event sort of played out, and that led to almost like a 20% correction for L&T. It corrected from 4,400 levels to almost 3,300, 400 mark. So worst part of the correction is over. Now it's a patch of time correction for the stock price. Since your view is very, very short term, I would suggest to keep a trailing stop loss of weekly basis on L&T at the level of 4,000.
Okay, that's the take coming in on L&T. Hope that answers your query. Thank you so much for calling. Let's move ahead with another query coming in from Mr. Nikhil Sharma, writing to us from Mumbai. Stock in focus is Zensar Tech, quantity 35 and an entry price of 694.4 rupees per share. He's saying, I had purchased the stock for a short term, but it has been years and I am holding this stock for the long term now, and I am facing a loss right now. Should I exit the stock or should I continue to hold on for future gains? Mr. Chokalingam, Zensar Tech, what would your take be?
It's a good buy. Investors may not make a good wealth, very sizable wealth, but certainly tactically anywhere 15 to 20% return is very much possible from current price, because stock has corrected a lot. Valuation is very, very attractive, only around 13 PE. Even the return ratios are good. Balance sheet is strong. So it's a good buy for possible 15 to 20% return. That's my research view.
All right, so it's a good buy is the word coming in. Now moving on to a question that we're picking up from Kolkata. The stock in question is HDFC Bank. Now the viewer has purchased 800 shares of this and entered it at 784 rupees. So he is sitting on some bit of loss over there. Now the question that he wants answered is, should I add further for averaging? What should be the target for the next 5 to 6 months? So Kunal, what would your advice be to him for the next 6 months or so?
See, it's a tough one, frankly, because HDFC Bank currently is still into a downward trend. The stock, I think even if it comes back into a lucrative territory in terms of the corrections, it's still into a downward trend. So short-term wise, I would believe that a better way to try and scale into this kind of a large cap stock is to have a 10% drawdown from your initial cost price as a point where you may want to continue to average out. The averaging out, maybe I think in 2-3 phases, is what I would suggest. So maybe the first averaging out you can do at the current levels of 710 approximately, which should be 10% lower from your first buying price for HDFC Bank or from your average buying price for the stock price. And I believe that keeps some powder dry in case if the stock drops down to sub 700 levels as a further averaging out. So it's a good time where you can continue to average for the stock price, but just keep a time frame which is extended towards more than 5 to 6 months.
Okay, so that is on HDFC Bank. Let's shift focus. And next query coming in from our viewer, Mr. Kedarnath, writing to us from Karnataka. Stock in focus is IFCI, holds 2 shares only at an entry price of 86 rupees per share. Mr. Chokalingam, is there a better stock to add more? Is the question.
Yeah. I would not suggest adding it. I think it is fairly priced. If you look at the price to book value, just a hold for a medium to long term.
Okay. The next question is coming in from Mysuru, and Bharti Airtel is the stock that the viewer wants the answer on. Now, he's purchased about, I think, 768 shares. The entry price is 2,090. Well, he is sitting on quite a bit of loss over there. He wants to know the view for the short term. So should I exit or hold it? So Kunal, what do you think he should do? I mean, he is, sitting on some bit of losses over there already.
See, Bharti Airtel is without any doubt a quality stock, but then even quality stocks go through a painful period where these stocks go into a correction. I would believe Bharti Airtel has entered into that phase of where the prices are going through a correction. Since you purchased at higher levels, I would suggest that current levels or maybe a slight bit of a bounce back if it happens for Bharti Airtel, say till 1880, 1900 levels, should be taken as an opportunity where you may want to exit the stock or at least reduce your holdings by a huge margin into the stock price. It looks like that the stock could continue to drag lower, for some more time. So if your view is short-term specific, I would suggest to sell on bounces or exit on bounces for Bharti Airtel.
Exit on rise is the call coming in on Bharti Airtel. And for the next query, let's try and get a both funda as well as technical view. It's coming in from our viewer, Mr. Santosh Amin, writing to us from Mumbai. The stock name is Swiggy. Mr. Chokalingam, we'll start with you. Our viewer holds 250 shares at an entry price of 285, stock at 283 right now. He's asking, I want to hold for 1 year. What would your advice be? Mr. Chokalingam, talk to us through the fundamentals of Swiggy vis-a-vis how it's placed compared to its competitors, Eternal. We're also expecting to see a Zepto listing soon, and you've got so many other players now in the quick commerce space, Amazon, Flipkart. How do you think this is going to pan out for Swiggy? And then Kunal, we'll come to you for a view.
I believe it's going to be tough for particularly Swiggy. Zomato is a better stock because margins are improving and they are making some profit. As you rightly presented, a lot of competition is emerging. It's going to be tough for Swiggy, particularly within 1 year, to make any meaningful profits and therefore to give a decent return to shareholder. But if investors are trapped in the stock, they can hold because the theme is a growth theme. One can hope to make money ultimately in 1 to 3 years. But otherwise, it's not a great buy. I prefer Zomato to Swiggy.
Preference is tilting towards Eternal, at least on the fundamentals. Kunal, would that the take be on the charts as well? Do you think Eternal is a better shaped chart than Swiggy?
Yeah, without any doubt. I think the stock has done very well in the last 6 months also. I think from the Feb-March lows for Eternal, the stock was almost at 210 to 15. And now the stock has crossed the 320 plus mark. So a decent 40%, 50% rally for Eternal already playing out. Compare this to Swiggy, the stock has given a modest rally of around 10-15% from its recent swing lows. So without any doubt, I think Eternal is a much more stronger chart, and it's better that you stick with the leader or the performing stock from the sector.
All right. So the next question that we are getting right now is from Sudha. She's writing in from Chennai, and she is asking whether she should purchase KEC for 6 months. So she wants a short-term view on that. So Kunal, what would you advise her? Should she be entering at these levels?
See, I would not suggest so because the stock is still into a downtrend. The last, I think, 4 or 5 months, the stock has been constantly going through a correction. In fact, in the last, I think, 5 quarters, the stock has been constantly making new lows. So it's better that you just wait for a point because, if in the next, 2 or 3 months, the stock sees another 5-10% correction and then it goes into a recovery, then, after 5-6 months, the stock comes back to the same break-even price for you. So it's better that you wait for a point when the stock shows that confirmation of a turnaround and then start to enter into the stock.
Okay, that's the take coming in on KC International. Let's talk about the next query that's coming in from our viewer, Mr. Madhav, who's writing to us from Hyderabad. Stock in question is Nuvama Wealth. Mr. Chokalingam, it's an interesting stock. We're hearing a lot about Nuvama right now. The quantity is 25, entry price of 1,230 rupees. Stock at 1,800 right now. So good move compared to where our viewer bought it from. Asking, can I add more at current levels? What's your view?
Yeah, for long-term investors, a good buy because there is a massive structural change in the Indian capital market in terms of number of people, investors entering every week. 7 to 8 lakh investors are also registering. So there's going to be a tremendous opportunities for wealth businesses in the medium to long term. So if somebody is willing to wait for 2 to 3 years, yes, even at current level, this is a good buy.
All right. So the next question that we are picking up is from Neil, writing into us and asking whether it is a good idea to buy Hindalco for the short term, and so if so, at what price? So Kunal, we've seen aluminium prices actually quite volatile. What would you advise him, and what levels should he enter it?
I would suggest a buy on Hindalco. I think 1,000 to 1,015 could be a decent range where you can look to enter into it if it's a short-term kind of a query. This actually would probably be like a swing, a midpoint or a pivot point for Hindalco on the short-term charts. It went through a 20% correction, I think 3 months back. Stock made a high of 1240 approximately, fell down to 930, 940, retraced back towards the 200 moving average, and is now continuing to move up higher. So it's a good time where maybe metal stocks as an overall basket could also come back into the limelight. So I would suggest about Hindalco, 1,000 to 1,015 could be a target entry range.
Okay, that's on Hindalco. But with that, we're completely timed out on the query segment of this show. Mr. Chokalingam and Kunal, thank you so much for joining us. But viewers, keep watching Buy Now, Sell Now, because on the other side of this break, we're going to be speaking with the newest kid on the block and a bumper listing. It has been at a 110% premium for Temsen's Instruments. So stay tuned, and a very special interaction lined up on the other side. Welcome back to Buy Now, Sell Now, and time now for a very special conversation as promised before the break. We've got the management of the bumper listing IPO today, Temsen's Instruments. Just take a look at that stock, trading with a premium of 97 to 98% even right now, and it listed on the bourses with an uptick of 110%. That's the kind of premium we've seen. Very stellar subscription and strong moat of the company. Let's try and understand what's the outlook going ahead and what exactly has got the street so excited about this bumper listing today. To answer that and much more, we've got Mr. Vinay Rathi, the Managing Director at Temsen's Instruments, joining us on the show. Mr. Rathi, hi. First of all, big congratulations on the kind of listing that Temsen's Instruments has seen. And you operate in a very niche segment, thermal engineering and specialized cable manufacturing. You're engaged in the design and manufacture of customized temperature sensing solutions, electrical heating solutions, and specialized cables. With such a niche business operation, talk to us about what is the outlook for the company going ahead, and where are the majority of these funds going to be deployed now that you are listed?
Yeah. No, thank you. So it's really overwhelming today to be listed, and it's a new situation now, right from we had small number of shareholders to over 1 lakh shareholders, more responsibility, and also a great pride for us. So thank you everyone who subscribed for the share, and we would do our best. So the company is operating in niche segment of thermal and cable solutions. 3 major product ranges what we have: temperature sensors, electrical heating solutions, and third is specialized cables, and working across industries. So typically the company has been working with a lot of heavy industries, and now what we see is also, other than the heavy industries, also OEM would be a big part of the company's future growth. And we see the specialized heaters also taking more growth in the near future. And we see the outlook to be quite positive. Good growth rates are possible, and having similar margin profile, whatever we are having today.
All right, Mr. Rathi, now the CF fell and inventory days rose sharply in FY26. You've said that this normalizes by FY27. What is giving you that kind of confidence that it's going to normalize?
Okay. So the sharp increase in the inventory days is because of some amalgamation effect of two companies that we have done on the last periods of the financial year. So the normalized inventory days would be about 70 days of inventory would be the normalized inventory days going forward.
Understood. Mr. Rathi, earlier today at the listing, you did announce your plans to expand into the OEM and automotive segment. You already have a joint venture with Victoria. Talk to us about what are the plans to foray into your traditional industrial space where you already have good presence, and now you're also looking at OEMs and auto. Any timeline on the cards? What could this do to your top line, and what is the overall plan here?
No, we would be keep on pushing the heavy industry segment, but on the OEM side, we are working with multiple companies, some of them in auto domain, some of them in also other power domain. So we see that this would also add up to the regular growth rate of the companies.
So, Mr. Rathi, your export margins seem to be better than what you're getting.
These are...
Sorry, please continue.
No, the thing is, these are also in the same industrial domain. So the auto industry is also an industrial kind of product, which is going to the auto industry. That is what I just wanted to add.
Got that. Now, I was saying that your export margins are better, than what you make domestically. So what is the export mix target over, say, the next 3 years, and which new geography contributes most?
So the export marginally, I would say, is a little bit better realization than the domestic, and we have been growing slightly higher in the export markets than the overall growth rate of the company. Typically, the markets have been Europe, Middle East, and Southeast Asia. So these are the areas that we have been growing. And now when we have added our company in Mexico, so we see that also the South American and also the American market, that is the next area of adding the growth.
Understood. So we are going to be watching out for progress on that front. Mr. Rathi, your return on capital employed, your ROCE has consistently grown at 20%. And since you said that a part of these proceeds are going to be used for your capex plans, just trying to understand, will this 20% ROCE rate, is that going to sustain going ahead?
So we plan to have in the similar lines like what we are having in the past. And the IPO proceeds are being used for some repayment of loan and addition of capacity. So the addition of capacity is being taking place in the specialized cables and the electrical heater segment. And we see that to be panning out in the next 1 year. The projects have already, we have initiated those projects, and so they would be ready to be used within 1 year's time.
Okay, understood. That's the commissioning timeline. And Mr. Rathi, also I wanted to talk to you about certain financials. Now, I understand that since you've had a lot of acquisitions, we can't compare FY26 on a year-on-year basis with FY25, but your margins continue to be between 22 and 24%. Going ahead, where do you think this margin number could stabilize? Are we looking at higher 20s anytime soon? And what would your bottom line growth rate trajectory look like?
So I would say we would have similar margin profiles whatever we are having. So we are choosing businesses such that the average margin profile would be maintained along what we are having for last 2-3 years. So even after the acquisition of the company, the margin has been typically in that range. And the companies that we acquired, so we are getting them to be more profitable, to be in the similar margin profile lines what we are having today. And the growth of, I would say, the profitability would be in the line as the growth of the sales, which is typically, I think the same growth would continue in the next years.
Okay, understood. And Mr. Rathi, what is the growth opportunity within the data center segment? How much of your revenue currently comes from there, and what could the runway look like?
So, from the data center is limited. So we are supplying some sensors for the power plants for the data center. So that is how we are supplying some things. But that is the initial period.
All right, Mr. Rathi, thank you very much for joining us, and congratulations once again on that bumper listing. Well, with that, it is a wrap on Buy Now, Sell Now. Thank you for joining us on the show, but news continues on the other side, so do stay with us on ET Now.